Welcome to Money Talks. I'm Cathy Yang, your intel on the Philippine markets and the economy. In the headlines, Philippine inflation for September came in at 1.7%. That is lower than the median 1.9% in our Business World survey, well within the BSP's September inflation estimate of between 1.5% and 2.3%. Let's take a look at that live shot at the Philippine Statistics Authority, where the agency has just announced headline inflation in September came in at 1.7%. Let's listen in.
Decrease tayo ng 20.3%. Month-on-month naman, may decrease pa rin siya. Kasi August 2025, the price, average price per kilo in regular.
And that was USEC Claire Dennis Mapa. Just to recap, inflation for September has come in at 1.7%, a little faster than the August 1.5%, but a lot slower than the Business World survey and the Business World poll median estimate of 1.9% from 12 of the analysts that we've surveyed. The figure is well within the Bangko Central's projection range of 1.5% to 2.3% for the month. And it also remains below the BSP's 2 to 4% annual target range. The central bank's full-year forecast is at 1.7%. And economists say the September print could influence the Monetary Board meeting later this week, and that is happening on Thursday, with most analysts in a Business World poll expecting a pause, while others anticipate a 25 basis point rate cut. National statistician Dennis Mapa said moments ago the increase in September inflation was mainly driven by costs of transport.
Ang pangunahing dahilan ng mas mataas na antas ng inflation rate nitong Setyembre 2025 kaysa noong Agosto ay ang pagtaas ng presyo ng transport na may 1.0% inflation rate mula sa pagbaba noong Agosto 2025. Ito ay may 71.3% share sa pagtaas ng pangkalatang inflation sa bansa. Nag-ambag sa pagtaas ng inflation ng transport ang mas mabagal na pagbaba ng presyo ng gasolina na may negative 0.9% inflation rate. Gayon din ang pagtaas ng presyo ng diesel na may 5.1% inflation rate.
Our first guest forecasts inflation to come in at 1.9%, spot on our Business World survey's median, but a lot faster than the actual September data of 1.7%. Jonathan Ravales is Senior Advisor at Reyes Lacandong and Company and joins us now live. Good to have you with us, Jonas. Welcome back to the program.
Morning, Cathy.
All right, so what do you make of the inflation result? You were spot on, the Business World median survey, but it was a lot faster than the actual result.
Oh, well, that's actually good news, especially most of my expectation was really more driven by the climate-related challenges that we had. So this 1.7 actually is a much welcome number for September and eventually raises the possibility or the probability that, the 25 basis point policy cut will materialize this month.
Well, how do you think the conversations would go when the Monetary Board meets on Thursday, given that it's a lot slower, but it's a little closer to the lower end of the target band of 2 to 4% for the Bangko Central?
Well, basically, the target's still between 2 to 4%. And since it's below 2%, it gives them more room. And if the Fed will continue to probably cut policy rates also, then definitely that gives more room for the BSP to do further cuts. And I believe this October would actually be a better month to do the cut, mainly because there are still upside risks between now and year end, especially with the Christmas season coming and all of this potential spending that could slightly fan inflation.
But do you think that that could happen, that the Fed would be cutting a lot more, considering the impact that a prolonged U.S. government shutdown would take place?
Well, basically, I think, sure, they'll probably cut by another 50 basis points. But I think for the Philippines, especially with all of this floodgate scandal, there's a need to probably help support growth. So probably now is the right time.
And you did cut your GDP forecast. You were one of the most bullish at 6%, and you're now down to 5.7%. Is it already factored in whatever happens to the flood investigation and all the perceptions, the negative perceptions that investors have given the investigation?
Well, basically, I guess you have to understand we're still a 70% consumer-driven economy. And so far, with resilient OFW remittances, with the peso slightly weaker, then this should be supportive of consumption, especially with the inflation trend still below the 2% target of the central bank.
Yeah, but there's a lot more variables here as we get a better grip of the extent of damage, disruption, and displacement, for instance, in northern Cebu following the quake. I mean, how might inflation look like in the coming month or two? Not only because of the quake, but the series of typhoons and floodings.
Well, basically, as I said, my expectations are probably full year or December inflation would probably be still below 2%. So we'll probably be ending probably between 1.7 to 1.9%. Rehabilitation will most likely continue, and that should at least provide some tailwinds to probably support spending growth.
And the suspension of rice imports, that carries on until at least December. Do you think that that would provide the extra tailwind to your own forecast?
Well, basically, I'm not in favor of extending the importation. Why deny cheap prices for everybody if we can import? I think what we've seen so far with the Rice Tarification Act is that it's slowly helping farmers. So it might have been, it's a good program to probably continue. But again, the idea is really more of a challenge in trying to decipher where the impact for weather and other factors. So, but in my opinion, I would probably take advantage of doing the imports now, because moving forward there could be tariff-induced inflation. So, having importation ahead of time should lessen the impact.
But because it's not going to happen, even as you wish that it would, that suspension carries on. So what impact do you think that would have on inflation? Is it deflationary or inflationary?
Well, that could be inflationary moving forward to the first half of 2026. So inflation could probably move towards the 2 to 3%.
Okay, just a question on interest rate differentials. You made a mention of the Fed cutting a lot more, possibly and probably, and also the BSP being led to cut a little bit more because of what's going on with the flood control scam. What then will the interest rate differential look like? And is that something that would drive capital in or out of the country?
Well, basically, I think despite people are looking at the interest rate differential, which are probably 25 to 50 basis points, and this is one of the tightest ever. I think given this floodgate scandal, I think regardless of how you bring down interest rate, most likely we are in a holding pattern if we tend to look at the outlook for the Philippines. Despite there are fundamentals, but the corruption issues tend to cloud the outlook.
Okay, so this is how it looks like. I was saying you were in the minority. You're one of 6 of the 16. Do you think that a lot more will go to your camp? And what drivers could that be? Would it be a GDP forecast cut, maybe coming from the government or maybe from a lot more of the private banks?
Well, I think we've already seen the IMF cutting their forecast to 5.4%. And this is much lower than the government's lower band of 5.5. So I think it is very immediate that a 25 basis point cut materializes. As for the past 2, 3 years, we've missed the 6% target. Last year, I recall, trying to tell everybody to cut in December by 50 basis points. And the first half missed close to 6% GDP number. So it's imperative to actually do it now while there's not much noise on the global front except for the shutdown.
Got
And and this is actually good. This cut could actually be a first signal for and good for investors because this could be the beginning of probably another 50 basis point cut next year. So this will be a good opportunity for companies to issue debt.
That's exactly what they're doing. We're seeing a lot more corporate debt issuances as we speak. Well, we'll know in 48 hours, Jonas, if you got it right, a 25 basis point cut down the line for the Bangko Sentral. Thank you so much for joining us. Jonas Ravelas of Reyes and Tacandong Company. The Labor Department has ordered a BPO company in Cebu to pause operations for safety violations during the powerful quake last week. Dole Region 7 has issued a cease and desist order against this unnamed firm for a lack of an emergency and disaster preparedness and response plan, failure to identify risks in its hazard plan, inconsistencies in its safety and health committee, and absence of a construction safety and health program. Dole will lift the order once these violations are corrected. The agency has also issued a notice of conference against another unnamed BPO firm for its failure to submit proof of corrections relative to its deficiencies. The moves come as Cebu reels from last Tuesday's magnitude 6.9 earthquake, which killed 72 according to the Cebu Provincial DRRMO. The Cebu chapter of the BPO Industry Employees Network claimed that some companies forced their workers to report for duty just 30 minutes after the quake. Other firms blocked the emergency exits to prevent employees from leaving office. The Makabayan bloc yesterday refiled the Magna Carta for the BPO Workers' Bill, which guarantees workplace safety, decent wages, and paid leaves for employees in the country's largest outsourcing industry. The government will implement a 1-month rice import window early next year to help manage supply while supporting local farmers during the harvest season. Agriculture Secretary Francisco Tiu Laurel said around 300,000 metric tons of rice will be allowed into the country in January 2026, a plan he described as more or less approved by President Bongbong Marcos. The move comes after the extension of the current rice import ban until the end of 2025. Tiu Laurel said that imported stocks halted since September could run out by November, leaving the country dependent on local supply by December. President Marcos earlier ordered a 60-day import suspension starting September 1st to stabilize prices and protect farmers during harvest season. The ban, initially set to be lifted in November, has now been extended through the end of the year. The Agriculture Department plans to reimpose the import restriction from February to April in 2026. You're watching Money Talks. Coming up, PSC President Ramon Monzon warns corruption could widen market losses. And we speak to Dino Aquino of Security Bank and Trust and Asset Management on September's inflation data. Keep it here on One News. Welcome back to Money Talks. I'm Cathy Yang. The president of the Philippine Stock Exchange warns of a market rout if the government does not hold corrupt officials accountable. PSE President Ramon Monzon told Bloomberg Monday that a swift, credible, and encompassing investigation of the government corruption is necessary to prevent inflicting further damage on the local bourse. The PSEI is one of Asia's worst performing markets, down by over 8% this year in a region where other gauges have zoomed to all-time highs. Monzon said, quote, until foreign investors see clarity in the results of the investigation, they will continue to price in risks in our market. U.S. markets ended Monday's session mixed, with tech stocks fueled by a multi-billion-dollar partnership between OpenAI and chip designer AMD. Both the S&P and the Nasdaq hit another record, with the Nasdaq up by 0.7% and the S&P by 0.33%. The Dow slid by 0.1%. Benchmark 10-year Treasury yields ticked up to 4.161%, and gold prices posted a fresh high at $3,948 per troy ounce, nearing the $4,000 mark. Haven is buoyed by expectations of a Fed rate cut and political uncertainties in the U.S., France, and Japan. U.S. futures point to losses when the markets open later tonight Manila time. Dow and the S&P are both down 0.1%, along with the Nasdaq falling by 0.2%. Let's take a look at the Asian markets. They're looking like a mixed bag this Tuesday. Japan's Nikkei 225 extending its winning streak, now up over 0.75%. In fact, that's 2.7%, with the Nikkei hitting another record high after the election of staunch conservative Sanae Takaichi as the new prime minister. Meanwhile, South Korea's Kospi rises by 2.7%, and Australia's ASX 200 is falling by about 0.4%. Let's take a quick check on the Philippine markets now and see how the PSEI is opening this Tuesday. It is slightly higher, just above 6,000 at 6,007. The stock market declined by 1.78% Monday, ahead of the release of September's inflation print that came out at 1.7%. As for the Philippine peso, it opens today flat at 58.35 to the dollar. Peso sank to an 8-month low, closing Monday at 58.35 against the dollar. That's the worst since February 3rd. The dollar performed stronger as the yen fell due to the appointment of Japan's new prime minister, which reduced expectations of a rate hike. The 10-year government bond yields ticked down to 6.019%. Vice President and Head of Fixed Income Trading at Security Bank and Trust Asset Management. So good seeing you, Dino. Welcome back to the program.
Morning, Cathy. Thanks for having me again. Via Zoom this time.
I know, on Zoom, and you got that right at 1.7%. I know you did a couple of days back. So what do you make of the result for the inflation for September?
Yeah, I agree with Jonathan. It was a pleasant surprise. So apparently my Gallup indicator is very reliable, but just joking around. But I think it's a pleasant surprise. So generally we're still in a very, very good environment despite the recent uptick in inflation in the past 2 months. So at least it gives the BSP some ample room to ease further this year. So our call is a hold this month, but I'm not sure with Jello yet. I'm chatting with him actually. But he did revise our full year target to 1.7 on the inflation.
All right. So why is there still uncertainty? I mean, it sort of solidifies the possibility and probability, as you heard moments back there from Jonas Ravelas, of a 25 basis point rate cut. But you're still holding on to a stay that the Bangko Central will not move on Thursday, despite the good inflation results?
I haven't really discussed it with Jerry yet, but I think that there's the possibility already for the BSB to do a preemptive cut, given this number. In fact, as Jonathan mentioned, the IMF recently lowered our GDP forecast to, I think, 5.4, if I'm not mistaken. So I think this would be a preemptive cut if the BSB does reduce policy rates this week.
Okay, it's a preemptive cut on possibly which drivers? Is it just inflation? Because we have a lot going on. There's the floodgate, as Jonas made a mention, and there's also the government shutdown in the U.S., which has entered its 7th day. And the last time that happened was like in 2018, And we went on for
2018, yeah.
35 days.
I think this one would last longer than 35 days, if you ask me. uh, just guessing on what Trump would want the market to at least see is he wants to prolong this. If you notice his tweets or the way he behaves, he's playing hardball with the Democrats. So I think just by gauging how he performs his talks or how he talks to his other counterparts, I think he's playing hardball and he wants this shutdown to prolong as long as he can.
Okay, so how might the narrowing interest rate differential then between the Fed and the BSP, let's assign the probability that the Fed will cut a lot more and that the BSP might be compelled to cut because of that. What is that going to mean then for capital?
It's going to be very good for capital. I think at the end of the day, even though we decouple slightly, I know we've been discussing the decoupling story for a while, as early as February or January. But I think at the end of the day, we really are still very much dependent on what the Fed will do. If their interest rates remain very elevated, say US Treasuries remain high, or they are still on a cautious approach, we will likely do the same. So if they move a little bit more dovish, we'll likely do the same as well. So supporting growth is the main factor at this point. So I think there's a possibility that the BSP will reduce also this month.
How's the bond market looking so far in the first few minutes after the September inflation result?
It's quite defensive, if you ask me. Which is not a surprise, given that it's quite, as you know, last month, September, we're the worst performing capital markets in the Asia, in currencies, bonds, and the stock market as well. So everyone is a bit cautious given the recent political concerns, but I guess once the currency finds stability, it's still at 58.35, and it's keeping investors at bay and not entering the Philippine market as of yet.
Yeah, I know that, when yields started to fall below 6, and that
Yeah.
kind of showed the extent of the risk aversion that went on for a couple of days.
Yeah, I think it's a combination of a lot of things at that time. There was this news on the JP Morgan, the Fed market pricing in the Fed started their first cut then at September. So it's a combination of good fundamentals, a good story for the bond market. But unfortunately, it kind of reversed a little bit. The JP Morgan story fizzled out. Now everything is focused on the political issues and, of course, the recent, the recent uptick in inflation.
So does that take away our chances then, or reduce our chances to be included in the JP Morgan bond index next month?
I don't think so. No. We're in the watch list already. So we already are in the watch list. The inclusion will happen in around 6 to 12 months. So the first step is to be included in the watch list, which we are already in, and then they will likely deliberate if we're going to be included in the next 6 to 12 months. So I guess if the political noise fizzles out, our chances to be included is still very high.
One of the silver linings, and Jonas made a mention of this, is the corporate bond issuances. A lot of debt issuances coming from the corporates. We have MPTC offering 15 billion pesos in fixed rate bonds with an oversubscription option of up to 5 billion. And there's also Toyota Financial Services launching a 2 billion maiden bond offering. What do you make of these?
And our bank also.
Yeah, exactly.
Offering,
Security
I
Bank.
have to plug it in. I just have to plug it in. But yeah, I think it's a good time to invest for investors. It's a perfect time. Yields are generally still very much elevated. So I think corporates are trying to strike while the iron is hot. The demand is very strong on every issuance that's been offered in the market so far. So I think given that the yields are still very high and there's interest on the general public when it comes to the bond issuances, corporates will continue to offer these bonds right now. If I think Jonathan mentioned the possibility of another 50 basis points cut next year by the BSP. If yields continue to fall BSP, then I don't think the demand will be as high as where it is right now. So at this point, I think it's an opportune time for the corporates to start issuing bonds with the demand very, very high.
All right, well, we'll leave it there and come back to you in maybe 48 hours and see how it goes with you on a stay,
Yeah.
Jonas on a 25 bips rate cut. It is a divided
you.
market out there. Thank you so much, Tino
Thank
Aquino
you.
of Security
Yeah.
Bank and Trust and Asset Management. The local energy sector mourns the loss of one of its most respected leaders, Oscar Sison Reyes. He was 79 years old. Reyes served as president and CEO of Meralco. He also held top executive posts at Pepsi Cola Products Philippines and Pilipinas Shell. He was a former governor of the Employers Confederation of the Philippines and was widely recognized for his contributions to the country's energy and business sectors. Our condolences to the family. That is it for Money Talks. I'm Cathy Yang. Catch us again tomorrow, 9:30 a.m. here on One News. Have a great day ahead.